Right, hello everyone. Welcome to the latest edition of the Salesfire Catch-Up Podcast, hosted by myself today, James Lees, Head of Client Services here at Salesfire. I'm joined by our inspirational leader, founder and CEO, Richard Himsworth. Hi, hello Richard.
Hi James.
How are you doing?
Well, not so good now.
Why?
Because you just like every week these intros get more ridiculous.
Well, I'm like, no, you're
right.
an inspiration, Richard.
Shut up.
This week we are joined by CEO and founder Liam Patterson or Bidnamic. Hello, Liam. How are you doing?
Hi. Yeah, very good. Thanks.
Thanks for joining us, mate. Much appreciated. Also, you guys, I've been well aware of you guys for a long time during my time at Mabel and things like that. A big fan of your work, so it's been good to get yourself on, talk a little bit more about your story and things like that. Also, the impact you've had on e-commerce over the last few years that you guys have been operating, and kind of go a bit about the growth and the usefulness you guys have for e-commerce retailers, because you just have to look at the case studies, the improvements that you've made for e-commerce in particular is massive. So it'd be good to have a good conversation about that. So thank you very much for joining us. So to start us off, do you want to give us a little bit of an intro in regards to Bidnamic and your journey to founding it and where you guys are now?
Yeah, absolutely. Yeah. So for anyone who doesn't know what Bidnamic is or what we do, we're absolute specialists at Google Shopping, which is the carousel ad format, obviously massively popular and dominant amongst e-commerce advertisers. So it's typically about 80% of their ad spend is going on Google ads, and it's going about 80% goes into Google Shopping. So it's massively important that retailers are optimizing this channel, and that's what we do. And we come at it from a purely technical perspective. So in the business, you maybe they're all out of the room, but you would see that we've got an office filled of PhD researchers, very experienced developers who've come from often kind of fintech, so financial services and technologies, and are very much bringing that machine learning component to it. And that's what it's doing, is optimizing and maximizing the amount of traffic we can get at the right cost for the retailer. So that's what we do as a business. And how we got here is probably an interesting journey as well. So we're just 3 years old as of this week, which is pretty cool. And the business we built it by accident, I guess. So we scaled up an e-commerce marketplace in print-on-demand merchandise. So we had literally thousands and thousands of sellers uploading all kinds of designs, wacky, wonderful, and very, very low quality in some respects, and amazing on the other hand. And we were getting this fire hose of designs coming in from thousands of designers a day, merchandising it onto loads of products like t-shirts, mugs, and our tech engine would visualize it. So it'd take the image, it would make it look like it was a person wearing it with the folds, the styles, and then our commitment to the artists and the illustrators, designers, was to get them exposure and get them sales and pay them a commission for getting them that distribution. So we went through all the different channels over the journey of scaling that business and kept falling down to Google Shopping, being a fantastic channel to connect people searching for whatever the design was themed on, and that product. And that's what we built, was the technology to allow us to do this profitably and scale up literally hundreds of millions of products all around the world in 14 countries. And my co-founder has a PhD in mathematics, so he really was able to understand the opportunity within arbitrage, so being able to buy the traffic for less than the profit it made, and how to scale that. And quite early on in the journey, before we were Bidnamic, when we were doing our own e-commerce business, we found the technology. We started building and developing our own approach to Google Shopping after using what was on the market. And that was kind of the journey, was just building this technology for ourselves, getting a great advantage there. And some of our investors in the business turned around and said, hey, could you do this for our portfolio companies? So Chris Forrest is one of our big investors on the board of Net-a-Porter, Marin Mayer, who's the co-founder of Booking.com. And they said, we've got a whole suite of different companies. Could you take the tech we're seeing get such great results for your internal e-commerce business and apply it to some of our portfolio companies? And we pushed back for months, said, no way, we know nothing about, this works for our business model. It might not work and probably won't work for other e-commerce retailers. We're very naive on the scale of Google Shopping, but how much ad spend was going through. We thought it was working for us because we had such such a long tail, such a huge amount of inventory that we could get a lot of sales from it because of the vast inventory, which might not be the case for other retailers. But eventually we kind of gave in and launched on the first couple of our investors' clients and saw a hockey stick of revenue. On some of the early clients, I think the first one was Stitch and Story, still a client to this day, and literally saw a huge increase in their visibility and their revenue and their growth. And naturally, our investors said, "Hey, maybe we're onto something here." We started through pull, I guess. So, investors spotting what we had, us applying it, seeing the results, and then around this time last year, so around 3 years today, we said, "Okay, we need to actually professionalize this. We need to go to market, if you want to call it that. Get in touch with other e-commerce retailers, build a process around it, which will become repeatable and scalable, document the results." And bearing in mind, we're e-commerce founders, really tech founders, so heavily into tech, PhDs in the founding team. We were absolutely not anywhere near the client services, the agencies, it's sales. These are all alien areas to us. So we really had to go out and approach it and find the way that we would like to do it. And I think that takes us to the journey of where we are today, which is 50 plus in the team. Next month there's another 22 joining us. So it's pretty rapid, and we're really proud actually of the Times 100 of the fastest growing 100 businesses in the UK came out I think a couple of months ago, and the top 7 retailers were companies we were working with. So wow. Which is cool. So literally number 1 and 2, Chili's bottles, Lounge underwear, which are the 2 fastest growing retailers in the UK. We've been managing in partnership their Google Shopping effort. So played our small part there. So really proud of the results. Yeah,
that's brilliant. So just on the commercial side of things, because you're from a tech background, and obviously your co-founders are as well. How did you find the approach to come? Because when I look at your marketing approach and your BD approach, I'm hugely impressed by it. So at Mabel, you guys are coming in for our clients and things like that. And it's like we look at the pitch deck and everything. It's like this is class. Like this is really, really good. So coming from a tech background, how did you approach the marketing and business development side of things to help you fuel your growth?
Yeah, great question. Yeah,
thank you.
And also thanks for the compliment as well on the material. So I suppose one of the things we kind of quickly realized was the what we might call kind of customer fit or customer DNA. So not all customers, it's not going to be a good fit for all customers. It's not going to work for all customers. And I think there's a lot of companies out there that don't necessarily filter that, they've got an opportunity, they close it, they get some money, and then it doesn't really work out. Whereas in software as a service, the key metric to recurring revenue, which is what we have, is to actually, onboard and retain the customers. So you're actually going to make a loss up front acquiring that customer, onboarding them, setting them up, and it's only in the future months and years that you really make it back. So what we knew is that was probably where we were going to fail, and we were kind of fortunate to have investors in the business who had built very successful businesses in this space. So Ivan Mazur, who you have to get on the show, he's a founder of Metria, which is an email tool for e-commerce retailers. So really knew our space, and he was a good friend as well. So kind of help guide us on what to look for. So we really understood the DNA of what it would work for and who it would work for, and learnt it as the business went. And that then became into our audit process. So when we kind of look with a prospect, so they come in or they apply or we speak to them, then we do an audit, and from that we're able to see, is it going to be a good fit? What's the opportunity? And really, very, very numbers and metrics driven on does this fit? Does this fit the tier rating that we're going to be successful with? And actually, our success, I guess, is that 7 out of 10 audits that we do or prospects we speak to will actually not move forward with, because we actually know that it's not going to be the right channel for them. Maybe they've got products that are better on Amazon, or they've got products that are that people aren't searching for, so they're better activating through display and through Facebook and Instagram. And then when they do have that high search volume and Google Shopping, they've hit a challenge, then that's when we can kind of assist them.
So I guess the important thing here is it's surrounding yourself with people who in a good, strong network of people who can help you, and know where you'll be a useful confidant for them in their businesses. You got these people as well, so where your strengths are, but also your weaknesses, and you lean on the right people who have past experience of making that work. And I think that's important. To be fair, it's a similar situation with us, isn't it?
Yeah, I think the difference is we've with ourselves, we're only 4 years old. You mentioned you were 3 as a company at the moment. We've kind of, you've gone from the beginning and just gone, right, bringing this established person, bringing this established method of doing things. I think we spent a little while in the wilderness feeling our way around that. Budgets were a big thing for us. We did not have any money. So it was very much a case of bringing in juniors and bringing them through the ranks. It's only now really where we can go bringing the best in class kind of thing in each department, I think.
Yeah, but to be fair, also you look at like some of our established members we have here now were the juniors who have grown and
and I'd never change that, because it's almost like no one comes in with bad habits, or no one comes in stuck in the ways on things.
Absolutely.
So that tends to work quite well, I think.
It does. And
I suppose whilst we've got like the investors who are, who give us the guidance, or that we can learn from, or can be the mentors, and they're practitioners. So they've built Forward 3D, they've built Ametria, they've built other big e-commerce businesses. We've also, in terms of the internal team, we've kind of really brought people through the ranks as well. So particularly in kind of the business development area, for the tech, unfortunately, we need that very tenured senior staff. But in terms of like the sales side of the business, the marketing side, it's all about people who've got that raw drive, that have the underlying skills that we can help to train and bring up. So I think that's definitely been a big piece of our growth, has been kind of internal personal development of staff and team members.
I think one thing it pays testament to the belief in your company, what you guys are doing. Anytime I speak to any of your BD guys at shows and stuff like that, they're massively invested in your product and what you guys are trying to do. And I'll shot a throwaway comment. Also, at Mabo, we were pretty much competitors to you guys. I'll shot some throwaway comment, and they had some really great, punchy, quick replies, which always showed how good you guys were, but also it just shows they really were invested in your tech. And you had, like you say, they were all youngish lads, to be fair. I'm talking no older than 26, 27, I'd say, the ones I was talking to. But no, they were young, hungry, and they believed in what you were trying to do. And we've had that here as well, to be fair. And I think it's important for any kind of SaaS company, you need these BD people to really believe in what you're trying to do, because that's what's going to win your business at the end of the day.
What comments were you making to him?
I'm not going to say on the podcast.
After he's had a few beers, he's
a
bit of a scuff-up outside, wasn't there?
Liam's heard them all before. He doesn't mind. It was all good fun. Especially when you start copying our T-shirts at shows as well, Liam. So on the kind of competitive side and the markets, you guys joined what is a hugely fluctuated market only 3 years ago, and you've managed to make an impact in it, which is quite difficult, because PPC management companies are 10 a penny. There's a lot of them out there. We could set up an agency tomorrow, me and Richard, we'd probably get a few clients quite quickly. If we're good or not, it's a different question, but you can win business. How did you guys stand out from the crowd? What did you believe that made you guys different to anybody else that your clients would be speaking to?
Yeah, it's a great question. Yeah, so I suppose the main points for you, like the technology itself. So because we hadn't come from the agency world, we actually had built the technology, and again we almost built it or developed it by accident, I guess. So we looked at what else was out there. So we'd actually used competitor products to ourselves, and kind of the frustration we had was that they went 70% of the way, but they didn't do the extra parts. And obviously that's third party companies, they're not going to customize things. So because we had that technical resource and their advanced skills of in terms of mathematics and approaches and reading through the API documentation and finding out what was possible and what simply wasn't possible, we were able to kind of build the right platform for ourselves, rather than just copy something that was out there, if that makes sense. And actually, if there had been something good, not good, there was good platforms, but if they'd done everything we wanted them to do, then we would never have built the business, because we were a tech focused e-commerce business, not what we are today. So I suppose that was it. Was that part of we saw some kind of opportunities around the way that you do and build really high performing Google Shopping campaigns. And then the second part was, it was just kind of going to market, I guess. And, because we knew that we didn't want to have loads of clients coming in and them not fitting, I suppose from early doors, we were kind of turning away opportunities that we could otherwise have closed and then wouldn't have worked out and could have maybe damaged our reputation. And part of that was because we were kind of engineering driven. So the teams would, the engineers would look at us and go, God, this is, no, we don't want this, we don't want this. So which is kind of sometimes frustrating. So you're like, brilliant business we want to work with. And the guys would say in the early days, no, we're not going to have to work with that. They've got, whatever challenges there would be on a technical side. So
that's a bold move, isn't it? I'm looking at you here in regards to like turning away business in the early days. I dare say something.
I believe it was Net-a-Porter would have been all over them.
Don't worry. It got to a few heated discussions and frustrations, and I guess that's also maybe how the prioritization was done. Was that we thought, okay, we need to prioritize certain features that we don't have. That mean we're turning away. We're not a good fit for certain businesses. So then those features would get prioritized based on real market demand, if that makes sense, or client fit demand.
Because we do that now, don't we? We have like minimum criteria and stuff like that. But I mean, you go back to the early days of Salesfire, when it was you and another couple in the small office around the corner from here. Was there any kind of criteria, or like you wanted mass people using Salesfire to then kind of get a better idea of how it worked?
Well, it's always been. We learned that over time. We learned what the thresholds were in terms of how big a business you need to be, how established you need to be, like what resource you need in-house to kind of get the most out of the platform. I think because we always, from the outset, it was a case of line of code integration, land grab. Land grab, and then we know we're limited in terms of what we've got technology-wise. So sell something cheap that's value for money, that's cost effective. And then worry about it later in terms of getting average order value up and selling more, more things into people. That was very much it. It was a case of get hold of that customer base first. And I think we've fairly kind of raced our way to 600.
Yeah, we're over 600 clients at
like
this
that.
point.
Nice. I do feel as though we're only going. It's not really. You look at it and go 600. 600 is okay in 4 years, but realistically, because the way the growth's kind of gone, say quite exponential, but the way it's gone, we went from going we've won 5 clients this month, we're flying, to then 10 the following year, 10 a month to 20, kind of going up like that. So,
You must have, I suppose. So from us, there's some red flags that I'd imagine you would have on clients, on if a client's going to be successful. So for us, our part of the journey of an e-commerce's growth is getting the product in front of the right customer. So, and our kind of USP is around the purchase intent. So how likely are they to buy? They just typed in, trainers. Have they put in a really long tail, very descriptive, we got purchase term like Adidas Super Boost men's size 10 red trainer, that's like really, really detailed, much more likely to convert. And that's kind of our USP. But equally, when they click on that, even for that long tail term, if they go to a website which takes 6-7 seconds to load on a mobile, then actually our results get really hampered. We're driving, we can do our part, which is show up at the right price and drive the traffic. But if that site doesn't convert, then the amount we can bid, even for those very good, very high converting terms, becomes not competitive because their conversion rate is so much lower, and only purely down to their site speed rather than the product, because someone saw the product and the price when they clicked on it. The search term was a perfect match, but the site was just too slow and lost the sale. And I guess you must have that same issue when if someone has installed Salesfire, even if they're clicking, you're getting good quality traffic through, but actually if the site's slow, you must also get that same hit.
Absolutely. We've had that with a few sites. So our threshold is we tend not to work too well on kind of your subscription model. Almost like your Gusto, that type of thing.
It's
where
product
single
to
product.
basket.
If it's single product subscription, we're not really the right fit for those types of businesses. The threshold we found was, and we do it in page views as opposed to revenue, just because people are less protective over telling you what the page views are. And we do 20,000 page views a month which gives us a viable UK market of we think about 15,000 websites to go at just in the UK, which will keep us busy for a long time.
Yeah,
But
exactly.
the truth is, because we're looking at increasing someone's conversion rate on site, the bigger the better. Basically, we have more effect, and you get a better return on investment. The bigger the bigger the turnover of the company, really.
Well, especially when kind of the results we're working with here are pounds and pence. So someone will come on a 2-week trial. If we can physically show them we have increased revenue, and they can say, no, that's going to cost me £500, but you know what? They've during this period, like if we base it on 30-day period, we're actually not going to do £10,000 a month off it.
Yeah.
Like, all right, well, that's worth it. And when you look at yourself in regards to Bidnamic, it's most of your stuff's based on ROAS. Look at a return ad spend figure for something like that. It's certainly worthwhile doing. Any advertiser would pay a lot of money to have that from a PPC management agency. So if we're able to do something like that, proof of concept. And again, it's like, for you guys, if you're going to perform better taking on a bigger spending account, there's more data to play with. There's more layers, more data layers to play with, and you can have more of an effect. It's the same for us. And it's the same for any SaaS company, I dare say. We had Neil from PPC Protect on last week. They're going to be able to display more money saved from bigger accounts and more data layers and more in a more competitive market because there's more bots in there. So I think we're all in the similar space in that instance. It's like, no, if you take on the smaller clients, you're not going to have as much effect. But also, if you take on a smaller retailer, like a very, very small SME, the money they're paying you is their money.
Yes.
That's coming out of their back pockets. There's more pressure on you to perform, and they're going to be
it's
looking
the money
more
that
at
spend
that.
on Sky Sports.
Yeah.
Or whatever, isn't it?
Yeah, that's it, yeah. It's the daughter's dance lessons, it's the kids' football kits, you know what I mean? So there's more pressure on that one where bigger companies, it's not just coming out of their marketing budget, it's coming out of their e-commerce budget.
Yeah.
So there's not as much pressure on it, but also it just works better because it's a bigger company.
Yeah, well, you give them more free rein to experiment with that budget rather than it just being, there's an acute need for that to work immediately.
Yeah,
agreed.
And I think that's the other thing that often people looking from the outside at e-commerce don't necessarily understand, that it is a whole journey. So often, we'll obviously work with a client, and our goal is to obviously increase their volume. That they want to grow their revenues, so they want to grow their monthly spend, month on month, or to a certain level, and maintain the return they're getting. And whilst we can do our part in terms of buying the right search terms, the success is also down to other parts of the business. So it's down to the product range. If they suddenly start selling twice as much products, and we've had one client did 8 times as much in a month, and whilst we were like, that's amazing, and they were like, that's amazing, actually they hadn't planned that amount of stock. So then all the top sellers, all the top most exciting products went out of stock, and month 2 comes around, and it's like, gosh, it's
you can't do anything about it.
So I think there's all the parts of a business need to work together. So they need, for us, it's so much easier when a site's got fast loading speeds, they've got a good checkout as well, something like a Shopify platform, for example, where people know it. It's very easy. It's got all the payment options. It's ease of use is fantastic, and again, good recommendation really helps, because something like Salesfire on there, people will discover more products. So for that same click, they're going to add and have a bigger basket, which just makes our job easier, because we can outbid people because we've got a bigger basket than competitors who are only selling just the shoes. If on a site with Salesfire on, they're adding the socks, or they're adding laces or whatever else to it, then we're able to be much more effective more quickly. And I think that's maybe what's lost with some people that just think, whether it's pay-per-click or yourselves, I'm going to take one of this, one of these things, and it's going to do it. It's going to be the success. Whereas you need to work everything. You need to work in combination. Delivery.
Yeah, absolutely. Yeah,
that's a good point. That one.
I think that's. I mean, going back years ago, you've got this thing where people's philosophy has always been, well, quite often, and I'd hear it time and time again, where they'd say, I want the site to convert better so I can save money on my pay-per-click.
All right.
So this kind of thing where I'm spending thousands on pay-per-click, but I want to drop it. I want to drop the amount of spend. And they're not thinking really actually what a good result, a strong result from us helping you convert more traffic is going to be. The end result is going to be you're going to spend way more on pay-per-click
because you can sell more product.
Because you can go further up that buying funnel. You can start being a lot more broad term with your with your ads that you're bidding on. And you can. That's how you're going to get a one up on your competitors, kind of thing, where they can't spend that much.
I think that takes back to one earlier points the question I asked you, Lee, in regards to when you were choosing and picky on your clients. That's like if someone's coming on board in here and they're saying, like, if they're on board team, they bring up that as that's a red flag to me.
Yeah.
I'd be like, right, we really need to work more closely with this client, because I think this potentially could be one that could churn further down the line, because they're not going to see the bigger picture.
Yeah, the mindset's very limited on it.
Yeah, it's very negative. Like, I'm coming here because I'm looking to save money, not grow my business. I'm looking to retain, but spend less.
Yeah,
That's a big red flag.
I think one of the best things that's happened in the past few years, though, is the likes of Shopify coming along, where you can set up a business and have a fairly good, fairly efficient website set up and running in a short period of time. Yeah. I mean, you're seeing less of, we still see it, don't we? But you see less of it now, where the website's creaking along. It literally looks like you land on we're seeing a few actually come through some of the marketing we did, where you kind of forget how small some websites are. You used to kind of going, right, they'll turn over 100K. Yeah, it's quite small, but there are those guys that sell, and there was one that came along to us. So he made cricket bales, sit on the top into toilet roll holders. Wow. He had two different versions of this product on his site. Just the most bizarre thing. And you looked at the website, and probably 60% of the page was his header, on there and things. And they still exist out there, but fortunately, I think the likes of Shopify means that people can who really don't know how to lay out a site can just get up and running with something that's half decent. It's going to be fast enough. They're hosting it themselves anyway, so they're not going to fall over in that way. They're going to get by on it, I think.
Absolutely. And it gets people that say, putting the toe in the water for e-commerce and say, oh, is this a scalable business for me potentially?
Well, it's giving them a chance, isn't it? Because some people, there'll have been tens of thousands of businesses in the UK alone where they'll have set off with product and an idea that's perfectly valid, but they've just had the worst website you've ever seen. And they've just gone, well, e-commerce doesn't work for me. And in my experience, people they've run through years ago, they'd run through 4 or 5 different e-commerce sites trying to get it right, and just thinking it doesn't work for them.
Yeah, very true.
Also, it kind of lowers that barriers to entry. Before, go back 10 years ago when I was involved in e-commerce, it was literally you had to spend tens of thousands of pounds, if not more. If you wanted to have a good site, you'd literally spend hundreds of thousands of pounds. You would be building the framework and building parts yourself, and employing developers, or using expensive licenses like Magento and specialist developers. And it was really was a big bet. Opening it was almost like more than a shop. A shop probably getting out and doing a shop would be cheaper than building an old e-commerce store. Back at the time, whereas now it's Shopify at 30 quid a month or whatever it is. And you've got a really powerful like-for-like e-commerce store. Great checkout, fast site. Loads of themes that you can choose from that look great, convert well, and also you can just plug in the apps. You can go right, and that's part of what we do when we work with a client, is we identify, okay, there's a few areas where you're doing well, or you're maybe behind other clients that we've worked for in this sector, and we can, our customer success team on the weekly or bi-weekly calls that they're having with the clients, we'll be able to say, okay, although we're here about the Google shopping, to achieve the next level, we're actually being held back by the site trust. Why not a free tool like Yotpo or Reviews.io or whatever to get some site trust? We can then take that in the merchant center, display the star rating in the carousel, and all these things would have been big expensive jobs, whereas now they're literally a click, and some are free, some are low cost, and it's just totally changed the industry, hasn't it?
I think along the way as well, people have, I don't know who's educated people. I remember having to do it kind of when we were providing e-commerce solutions, we were actually having to educate people that you don't need it to be completely unique. So people come along going, well, I like this site and like this site, but mine's got to be completely unique, and I'm going to have this here, and when you click through here, it's going to do this. And I think people have gradually, I never hear that. Maybe I'm less in that side of the industry now, but you get less of that now. I think people just understand, actually, I want it clean, slick, still relate it to, I want it to look like ASOS. I want it to look like, whatever the clear site is that month, flavor of the month. But yeah, the happier to go along with what's. I think that might be because there's just so many kind of plugins and so many third parties that. I mean, historically, that's where they get caught out. They'd have like a very bespoke site, and then how do I add these other things into it to help improve that site? And now I think they realize actually that's just, I think it's all because it's all laid out for them to see. They'll go on Shopify and see all these apps and go, I've got to be on side with this.
Yeah.
I can't go away doing my own thing. This is too much for me to, bite off and chew, I think.
Yeah. The other big benefits of the platforms like Shopify is that you get a kind of single source of truth. You can, the store owner can log in there and they can see these are the orders, this is who they've come in, literally a list of orders, the revenue. And like, as silly as it sounds, 7, 8, 10 years ago in the e-commerce business we built, that was like a huge, can we see the orders and the revenue of a day? Can we see what channel they came from?
Yeah.
And you'd oh no, that's, it'd literally be like weeks to build this thing. And, oh no, it didn't get updated, or it did, it's got, a conflict.
Log into PayPal, see your number there.
Yeah.
And log into SagePay and add it to that number.
Yes, exactly. And I think that's also important because what we see is that, Shopify has fantastic tracking internally, but actually we'd say probably as far as maybe 2 out of 3 websites have incorrect Google tracking. So the AdWords data that comes through is actually either over or under tracking. So very typically they might have multiple pixels on the website and they might be tracking the same conversion multiple times. So again, that's some, so what I mean by conversion, at multiple sales. So a sale has been picked up on 2 or 3 pixels and therefore allocated to campaigns, and it looks, it's just incorrect. The numbers in AdWords or Google Analytics are incorrect versus what they've actually had in their store. And again, that's been a big learning for us, and we've built in-house technology called reliable tracking periods, so we can literally go through and the system, using machine learning, will find which pixels are over tracking and what times, and it allows us to go through data like on different e-commerce platforms. If they were, on Magento, they moved to Shopify, changed their tracking. We're able to use all that historic data to understand their performance, and that's still one of the surprises to me, is that whilst you've got platforms like Shopify which has absolutely 100% accurate data, you've still got big players like Google and Facebook and these pixels that are just getting incorrectly installed by the e-commerce store builders or the managers, and it's resulting in this under or over tracking of revenue, which I think is still a massive issue actually.
And I'd just like to go on record as well, guys, just say this isn't a paid advertisement from Shopify. Other e-commerce platforms are available.
Oh, yeah. How have we done that?
I don't know. We have. I tell you what, I'd have loved to have heard him say this 5 years ago when he was at Visual Softy. That would have been funny, hear them say that.
I'd have got solitary for that.
Yeah, you would have.
Solitary for like 3 months. 3 months in the hole.
I'll go on record. We've seen some great Visual Soft websites as well.
It's been a few. Liam, I'm getting the wave from my producer guys, so we're going to have to start what I want to do is because I want to dive deeper in regards to automation and stuff. So we're going to get you on again in a couple of months or something to do another one specific. So I want to dive more into your tech and the benefits of automation for e-commerce retailers, because I can just go from my experience when you discuss automation with e-commerce retailers, they can be quite hesitant about it, but personally I'm pro it, so it'd be good to have a further discussion, maybe get yourself and somebody else on as well to go further about that. But I just want to kind of close with just one question as well, because we're about to hit Q2 in 2021. It's going to be a very different Q2 to last year in particular. At least we know what's going to be happening. We absolutely didn't last year. What's going to be your main tip for e-commerce retailers to get the best out of Q2 this year?
Yeah, so I think it's going to be challenging in some respects. I think people are already going to be, clients are already turning us around to us, which is fine, saying, look, we want to have 50% growth, 40%, 30% growth, which is absolutely fine. But this growth, next month, all the shops were closed. Is the peak of the pandemic. E-commerce as a percentage of retail was so high, it's never been as high. It's literally like 30 years fast forwarding. And whilst we absolutely know it's not going to settle to where it was, it's always going to be higher. And as any business should always want to grow, we are, we're kind of being cautious in terms of we do think that having the high street back open, when it does open, probably I know from friends and colleagues and myself that people are dying to get out of the house. The dying to get away from looking at devices all day and instead get out to the high street and do things they've not been able to do, like shopping with friends. So I'm kind of optimistic but cautious. So I'm cautious that people are setting too big goals for growth. Maybe setting 50% up on a year which is already way above what they had. Maybe it's 300, 400% up on what they had the year before. So so we're kind of being cautious to clients and to retailers, but equally there's a lot of verticals which is going to grow, and I think e-commerce has been fast forwarded and will have a higher penetration, a higher rate, particularly in sectors we might not think of, where people are still going to feel vulnerable, particularly next month. Going to certain shops, doing food shopping, which we've seen a massive growth of online, and also audiences which are in verticals that are maybe more high risk. So shoppers who they wouldn't used to buy online, now they have. I don't think they're going to go back to buying in person as much, particularly if they've got a vulnerable, certain age products which are maybe more vulnerable than others. So I think I'm excited to have it unlocked, but I think there's going to be quite a lot of maybe overinflated goals that people are signing up to.
There's going to be a lot of movement. There's going to be a lot of things happening. I think the thing that we've noticed, there was quite a high profile case in the news recently where people are just they're still having to pay or still racking up bills, money owed for PAYE and national insurance on furloughed employees. Yeah. And that money isn't really due back until we come back out of this. So I think there's a lot of businesses on the high street that are going to be, and obviously connected into e-commerce sites as well, that are going to be kind of going, we've got to smash it. We've got to absolutely smash pressure, these first few months out, because it soon adds up. Yeah. These bills that they've got to pay, and the accruing interest as well. Yeah. So it's going to be interesting. I think the biggest, not to talk down the high street again, but I think the biggest losses we're going to see to the high street are still to come over the next year, because really it's like everything's on pause for the time being. Yeah, and that could still affect things online as well. Like I think that could help instead of it being significant switch back onto the high street, that could hit things, because you just look at our local town centre now. All the major old decimated historic buildings, they're gone. Like they're not opening up when we come back.
Top shop's gone.
So
that need for people going into town and things, that hub of shops isn't really there. So I think it is gonna change. Yeah.
It's I hope hopefully that some of these e-commerce stores that we've seen a massive support of small businesses, people opening these small businesses online. And I hope that landlords are going to be a bit more flexible. We've got kind of innovators like a Peer here, which do short-term leases to let someone try out a space for a few months. And I really, really hope that some of these people who've seen great success and people want to buy from independent, people want to buy locally, they want to support these people who've actually might not need to go back to their job, when they're unfurloughed, because they've created a really significant second line of income, which they want to make their primary income. So I'm kind of hoping that some of these will transition into the high street, and we'll actually have, rather than having the same high street in Newcastle as in Leeds as in Birmingham, we'll actually get really cool independent, operators.
Yeah, it would be good, wouldn't it? Yeah, without a doubt. They are very samey.
Yeah, massively.
Yeah.
Massively. I'll tell you one thing, I do feel sorry for any client services department and a marketing agency, or anyone like for you guys managing Google Ads and expectations for that. It's like the managing expectations over the next 3 months. Well, the whole of Q2, it's going to be a difficult job, so fair play to anybody doing that, and my department as well, because it's not going to be easy, but we'll get through it together. Right, Liam, thanks for coming on, mate. Much appreciated. It's always good having a chat with you, mate. It's probably the first time I haven't chatted on you drunk at the end of an expo, to be honest, mate.
Exactly.
So this is as professional as it's come before. But no, it's been
slurring
good,
on about automation. How automation can't replace a human. That type of thing.
That kind of thing. But I do want to have a big dive conversation to that, be fair. So good to have you on again in a month or two, Liam. So again, thanks for your time, mate. Much appreciated.
Cheers.
And thank you, Richard.
Thanks.
So it's good doing things, you. So thanks for listening, everyone. And we'll speak to you all again soon. Thanks very much.
Cheers. Thanks a lot.
Bye.
Thanks.